Economical with the truth. That was the scathing assessment of Royal Commissioner Kenneth Hayne about what big banks tell customers about commissions paid to mortgage brokers. Questions over just whose interests mortgage brokers act in have reverberated through the $50 billion industry, with uncomfortable answers over fat fees and poor outcomes for borrowers. But the broking industry has hit back, insisting the customer comes first. Here's Daniel Ziffer.
For Australia's mortgage brokers, it's a question that could have a costly answer.
Who does a broker act for? Who does the customer think the broker acts for? Who does the lender think the broker acts for? Are there varying or varied answers at various steps? If there are, what are they?
Commissioner Kenneth Hayne's hearings had a recurring theme. Whom do they represent? The Peak Lobby Group insist they're for the customer and say the comparisons of the Royal Commission aren't fair.
It seems really disastrous. And you say, well, geez, what's going on there? It's actually not the case. The difference between proprietary channels and broker channels is about $32,000. We're not talking $100,000, $200,000. We're talking 32 grand. No one asked the borrower in that research, was it a bad outcome for them? That discussion wasn't had.
Consumer organisations say the evidence backs their research. Broker loans are larger and take longer to pay back.
They're paid to sell, and they get paid more if you borrow more or if you borrow with particular lenders. They present as a profession that's there to advise and help consumers, and consumers quite rightly think that they're there to help them.
In uncomfortable evidence for the industry, the Commission found a previously secret submission from Commonwealth Bank CEO Ian Narev, admitting customers who use mortgage brokers are losing out through fees, interest and incentives. The Commonwealth Bank executive who fronted the Commission was forced to agree. Some customers are getting a bad deal.
The larger the loan, the larger the trailing commission.
That's correct, yes.
And the longer the period of the loan, the longer the period over which the trailing commission will extend.
That's correct.
Mortgage brokers typically don't charge borrowers for their services, but are paid upfront and trailing commissions from lenders. It's big business. In 2015, loans generated $1.4 billion in upfront commissions and a further $984 million in trailing commissions.
Who does the broker act for?
Commissioner Hayne will answer his own question in his report. Here's what the players say.
Well, as a business person, they're acting for themselves, but they act for the client when they're first doing the discussions with the borrower to ensure that they get product that meets the needs that they're looking for.
The broker may say they act for the client, but they're paid to act for themselves or act for banks or other lenders.
That complicated relationship could see more regulation when the draft report is handed down in September.
Daniel Ziffer reporting there.